Hello guys, and glad to have you on board again. Today I expected to record with the video stuff today, but there is a huge problem, that is winter related, and the fact that we have kind of a cloudy weather today in Toulouse, which is kind of a problem to me because in order to record a video I need to have enough brightness and natural light, and therefore I am actually unable to record. Like, there is literally not enough brightness for the camera to catch up on these things, otherwise it will be a lot of pixels and not really good quality. So anyway, that's not what matters. What matters is the technical stuff. So let's go into review this. We're going to do a global vision in here because we need to update what we've said on the weekly basis analysis. We're getting into real technical areas in which things will decide one way or another, both into the crypto sector and into the stock market. So let's go ahead. It's probably going to be a longer than the usual timescale for this video. All right, so starting with the stock market and then cryptos, we first make a quick assessment in here. As you can see, the crocodile mouths have been definitely opening here into the sectorial analysis of the S&P 500 sectors. What has been the big leaders, the most defensive sectors, energy and financials, all of those things, industrials, all of the defensive sectors, value trades have reached out their targets, and as you can see, the profit takings go real fast. As these trades reach out to the target, people take profit and no one else is buying, so we have a pullback on all of those assets. And let me be clear, I don't even think this is pullback, I think this is reverse. So I think these guys are reversing, but we do see in the same time a catch up on other sectors that have been underperforming recently, the tech sector, not to mention just specifically Apple. So we're going to talk about this one because we have to study all of the informations we see from this one. This is definitely the assets that will orientate the portfolio. I know I'm saying this all over and over and over again, but if you want to trade and forecast S&P 500 today, you just can't do any different but looking at the goddamn Apple stock, okay? It is stupid, it is in a totally bubblish behavior, but once again, bubble can go way further than you people think it is, because of course it's not about rational behaviors, but just going as stupid as possible. Okay, so the question in here is, do we have the end of something in which these decorrelation structures will basically terminate and recorrelate everyone to the intermediate areas, in which of course tech sector could be kind of catching up on prices, but the thing is, which one is going to compensate the other? Is it going to push the S&P 500 to the upside or to the downside? Because these guys weight a shit ton into the SPX, but these guys also weight, and if they were losing like 10% in a straight line, then of course that wouldn't be a bullish sign for the broad market. Okay, so that is the first information. We're on the verge in here to possibly start a recorrelation structure in which everyone should start pointing into this direction, but the question is, can it actually be bullish for the S&P 500? Yes or no? That depends on the weightings, and we're going to have to dig a little deeper into this. When we have a look at broad market participation, as you can see, S&P 500 is trying to survive, but the Nikkei could be on the verge to create a third range boundary, and I don't like that. I'm going to go into short selling the Nikkei again eventually, but this is something for the experienced traders. We're going to talk about that eventually. Behind closed doors, the Russell 2000, which has been the quite of a upward pusher recently, which is a defensive sector, is not a good sign as well. We can see some profit takings. I can definitely tell that some people will say, oh, we're gonna break this to the upside, trend follow shit. It's not. These are freaking defensive sectors, so if they keep on ranging this way, they're very likely going to break it to the downside, and that would be a pretty negative sign. Finally, last but not least, my scenario is this one. If I have a look at the yearly candle close, okay, deleting all the stuff, I rarely see these types of candle closing like that. I don't nearly think we're going to close the year like this. So everyone is overexcited right now. If you have a look at the CNN Fear and Greed Index, we've dipped on top of 90, which is extreme greed, absolutely staggeringly stupid when we are recessing the real economy. So it really has gone absolutely staggeringly stupid. Of course, we can do this because we have some assets that are definitely trading into bubbles already. So bubbles can keep pushing, just like trend will push prices multiple times and reverse just one time. what you need to understand is the difference between trends and bubbles is that the bubbles, once they reverse, will not get back to the previous historical highs until a long time. They'll have to digest. And as we're going to eventually terminate bubbles that have been going on for 10 years, I mean, trends that has been going on for 10 years. Some have been going on for 20 years, actually. And we're just going totally stupidly parabolic. If we terminate these trends, that means we'll make no gains on these stocks for approximately 3 to 4 years. And that's exactly just like Bitcoin. That doesn't mean they will not recover from this. That just means there will be no gains to make on these stocks. And if the shit really hits the fan, then this could turn out to be a crash. I doubt it, because personally I think these guys are still going to be part of the future and make some money and growth and participate to growth. But all of this is already in the prices, which means there's always the worst case scenario to price in which things don't necessarily go as planned. And in that perspective, as we booked all the gains, there's just losses to pile in. So we'll see all about that, and specifically all about Apple. But when I see this, I'm just saying, all right, man, there's just 1 month left to terminate the year. Are we really going to close like that? Or could we just retrace down there and close the year in here? Wouldn't that be absolutely crazy stupid? Would it be absolutely bearish to do such a thing? We would close the year on a negative basis, but oh, just as a quick reminder, we had like a freaking pandemic, so that wouldn't nearly be a problem to close the year as a negative option, because last year was absolutely out of any rational standards. And this candle, even if it was closing at 3,000, my personal opinion is I would still be a buyer of this market. I still think that this thing's still positive for the future, but that would be more rational to close out there. So doing this would cause kind of a pullback, because that would somehow require the market to drop approximately 20%, going back to bear market territory, guys. And even though we would be going down there, I don't think we would nearly go into bear trading territories, but just inching out there or dipping a toe just to scare you out, because of course people are getting overexcited. Fear and greed is extreme greed right now. There's not enough market breadth, and we're still dealing with tough resistances. Okay, so if you think this is a straight path to the upside, I'll totally disagree with that. But that doesn't mean we need to be heavily selling stupidly. That is anyway trying to catch a market top, trying to build some cover trades, because it's not about selling. It's more about how to risk manage the portfolio that is bullish exposed. And my personal thing is that as we deal with high prices, there's nothing beginners can do out there. It's really a professional and experienced stuff. So with the experienced only, we're looking at potential cover trades into this area, because we have multiple factors suggesting this is very likely going to happen. Okay, I don't think this is nearly going to be bearish, but this is the type of candles I don't like, because we have quite a lot of optimism in a context that isn't supposed to be optimistic. We've done range breakouts in here, which really leads me to believe that yes, we can keep pushing, of course, but there's also very much more likely possibilities of a huge drop that will be quite of an opportunity. So it's more about, I'm not buying those resistances. I'm questioning whether or not I'm eventually going to look for cover trades, but more importantly, if we have a pullback, I think it's going to be an interesting stuff to pay. Okay, so just bear this one in mind, but this is for speculators and advanced traders only, experienced guys, and we're going to have a look at deeper risk limitations on the shorter time frames to do this thing well. But I kind of like what I see earlier today, this 4-hour signal. Oh man, you really know what we're going to be doing with this on the experienced guys. But all right, behind closed doors, I simply don't want to tease the beginners. If you go down short selling a market like that, you just absolutely don't get it. It's all about eventually covering the bullish exposition, but still we need to be bullish in those markets, just not crazy bullish. Okay, that being said, we need to go straight forward to Apple. This is what Apple just shows us. Okay, so in here the study is pretty real quick. I'm going to take the daily chart as a reference. You can definitely see in here I've put in my second range boundary of this mature triangle and the third range boundary. As long as we deal in between, there's nothing to think about. Don't be dumb. Okay, it's really a mature range. Don't trade it. Just put your third and second range boundary and wait for the shit to show up. If we manage to break the third range boundary and reach out the 1-to-1 ratio, which is going to be out there, then that's a positive sign. If we just get out there, make a fake breakout and reintegrate, then we might not want to reach out for the second range boundary, because if if we ever get there, shit will really hit the fan. So I'm personally already bearish on Apple, you know that, but I'm not stupidly doing it. I have limited exposition. I know where to exit if it doesn't work out. I'll totally accept being proven wrong, and I know that I'm short selling a bubble. So this is not even for experience, guys. That is for even higher than that. That's the highest possible level of risk taking in the market. And it requires a shit ton of knowledge, a shit ton of psychological management, and more importantly, a very tight trading activity. Okay, so if I'm wrong, I'm definitely going to accept that, get the fuck out, and eventually enter later on. But right now, I don't think I am wrong. I think market will probably try to test the third range boundary, probably try dipping a tool on top of it on the best case scenario. Worst case scenario, we don't even try it and we immediately go to the second range boundary, which would be a freaking bad news for Apple, because if we get there, oh man, there's plenty of stop loss to trigger. And yes, if you zoom into this chart, you will say, okay, when I see this, I see upside trend, mature range. Well, Phil, the probabilities are to the upside significantly. Well, yes, they are, but that also means that you're definitely not doing your job if you don't see that the support context is unfolding, that it has both unfolded support and resistance context multiple times, suggesting that it's even accelerating. So this is not a trend. This is at least excessive, not to mention it's even worse than that. If you just zoom into the higher time frame, you would say, oh, fucking crap, what is this? This is not just even an excess. This is a speculative bubble right to its maturity. I don't know where the market top is going to be, and believe me, these things can still ride their way higher, but they will fail one time, and when they will, it's not going to be pretty. Okay, so don't buy into Apple. Really, really way too dangerous. People tend to believe that technicals are at play into bubbles. Oh man, they're just so dumb. That's not what it is. When a bubble shows up, yes, of course, statistical behaviors tell us that this is the likeliest thing to come. But it's also like, well, go ahead, buy that, put a stop loss there, and you're very likely going to be triggered. Okay? So that's pretty much all about it. If you want to lose money, just do it. Okay? Of course, you could make some money, but now you don't even think about it because you think technicals apply, but we're in a mature bubble. And in mature bubbles, things can go absolutely anti-statistical without any further ado. Okay? So Apple is still a problem for me. I don't know what to do with it. I'm definitely looking at it. I'm not going to reinforce until I have a clear evidence of bearish action. But right now, as long as they do not break the third range boundary and keep prices to push to historical highs, I don't nearly think Apple is bullish. Okay, so we'll see all about it, but that's the only way we can have a pullback in Wall Street if the Nasdaq is failing to catch up on its late trade, and if basically we have take profits on the defensive sectors and the offensive sectors not managing their way into trending or bubbling again. Then in that perspective, that's it. We're probably going to get a pullback, and this pullback can go down to 20% off historical highs on Wall Street, broad indices like the S&P 500, and that wouldn't nearly be the end of the world. That would just be terminating this year with an average stuff. Everyone think that we're going to have a Christmas rally. I think we already had it. So hasn't that been quite of a freaking bullish year? Yes, it has been. And don't get me wrong, I'm not nearly thinking about short selling this market for a long period, just covering the gains, because I think the market right now has some retracements potential and kind of a reverse Christmas rally. This is a possibility that we'll need to risk manage with the experienced people first. And if we have early signals that it is working around this plan, I'll let you know into Discord. So please, guys, don't anticipate. Don't be dumb. This is a reversal trade that can eventually occur. And that requires a shit ton of knowledge that most of you guys simply don't have. All right, next we go for cryptos. Here we go. So we've got plenty of stuff to talk about on cryptos. The most important one being, oh god damn it, we'll have the beacon chain launch today. I don't nearly expect it to be a bad thing, but God knows what's going to happen. If we have volatility into the stock market today, that will very much impact cryptos eventually. Or maybe we'll get to finally get a difference between these two. We could, and I would like to see at some point people being proven wrong with this stupid correlation system, that in which they say stock market cannot go down, or cryptocurrencies cannot go up if the stock market goes down. Well, Everything's always possible in the market, and I would goddamn like to prove them wrong. So we'll see all about it. I would say that at least right now we do have quite of a positive news flow into the crypto sector and not that much news flow into the stock market, but a boast of hope and false flags in the US. Because of course it's a lot of talking, but we also know that we're not going to get a second economic support plan before actual president shift. So it's really all about right now, all of the good news are priced in, and like I said, it's already in the prices, which is not the case for crypto. We're pricing in the risk, and I kind of like the fact that yesterday, or over the latest few days, we totally fucked up the third range boundary speculative areas in here. Basically, the market just says, oh man, you know what? I don't give a shit. And remember that third range boundary matter when they're traded, but also when they are not. And if the fact that we have a third range boundary that is absolutely not traded, that we go there in a freaking straight line, even in the kind of building the squeezing price structure right now, meaning that there is not enough market breadth, the market isn't oscillating enough, that means two things. First of all, either we get a boost of volatility and we fuck it all up, and there we're going to get a double top third range boundary, which is less likely going to happen, statistically speaking, but still happens. So it can very well show up. Otherwise, things do just great. We've got not enough volatility and we break through the level and we generally get to a 1-to-1 ratio of the potential third range boundary area. So this is where the third range boundary would have been. It didn't react, so you can take this, double it to the upside, and that gives us a 700 area as a first target, and that doesn't mean we have to stop there. Remember that cryptos have a freaking nice, fancy trending of a fancy way of trending with stupid FOMO waves later on. So all I'm saying is that this is an area of interest, not an area to short sell, okay? An area in which signals will matter. That's simple as that. So it's hard to say whatever is going to happen today with cryptos because of fundamental things. And like I said, it's more about I'm going to study the technical reviews of real techie guys who will tell me what's good and what's bad with the code of this thing. Did they showed up? Did they highlighted some problems, or did they actually kind of think this is a masterpiece, which we'll know only by people who actually know the fuck they're talking about, which is definitely not my case in this perspective. Okay, so I don't know crypto, we'll see all about it. All I'm saying is that the short-term signals are still favoring for the upside. I'm definitely, in terms of relative strength, looking at the big guys, because if, like in Wall Street, these overperforming guys were going to reverse, that would be probably a sign of risk aversion, and in that perspective, I will probably look for some partial cover trades in my portfolio. But as long as they keep on going this way, if they break up, then of course that's going to be pushing these things way further down the road, and I will be of course looking at the lagging guys if they catch up on overperforming Bitcoin, which should be quite positive for the BTC dominance. Still the same old things. I don't really look at Bitcoin right now because I don't think it is the important thing to look at, but still, if you definitely want to trade Bitcoin, this is the only thing I have. Same thing as Ethereum, take the broken third range boundary, double down the target area, and that gives you a 1-to-1 ratio target slightly below 21k. We have the same squeezing pattern structure, so we can definitely ride our way up here, and if we get there, look at the fucking signals. That doesn't mean you have to short sell whatever, just means the signals out there will matter. Okay? Anyway, later today I'm going to record the TL number 16, in which we're going to talk about this pattern, specifically the one in which we break the third range boundary inside a major trend. But we'll talk about it. Okay, see you guys later. Trade safe, don't be dumb. And right now is not about time to be absolutely staggeringly stupidly bullish or bearish, but more about managing the risks. So looking for cover trades without turning bearish either in stocks and cryptocurrencies, but don't be dumbly balls out like this is a raging bull market and we can't just go to the upside. No, of course, retracements are a possibility, and you might want to think about it as well. We're here to risk manage probabilities, not forecasting the future. Bye, guys.